the 26,000 mark, 80 points away in the next hour or so. You know, that optimism is coming from precedents where you do sometimes see that push surge of inflows coming in the last 1 hour of trade, 0.5% up. Markets are doing well, steady really. Let me pull up the Nifty line chart for you, because remember, even the Bank Nifty has decided to join the party, although a little belatedly. But this is the kind of day that we've seen, and the Nifty pretty much at the day's high. 25,934, the Nifty right now above the 25,900 mark, very, very comfortably. Can we get that last bit of push coming in? I just want to pull up the Bank Nifty for you as well, because Bank Nifty had a bit of a dismal start to the day. You can see that here. But look at the spike in the last few minutes. About now 0.75% up on the Bank Nifty, and that's where the entire story will lie, isn't it? We'll pull up the advanced decline ratio before I get to the heat map to show you if this is a broad-based story, and it definitely seems to be. Advance is outpacing the declines by a decent level. Mid-cap and small-cap will also typify that this is not necessarily just a Nifty story. It is something that we're seeing across the board. So nearly 1% up on the Nifty Mid-Cap 100 as well. Let's look at the small cap. Small cap also nearly 1% up. All of them trending upwards. So we're looking like we're set for a good afternoon. 26,000 or not. Tell us what you think on all our socials. All right, let's get the heat map up just for a second and see what's happening there. ONGC racing to the top. Bajaj Auto. Remember, it's been a day of autos, and Bajaj Auto and M&M have been leading that charge. But look at the introduction of an SBI, a Kotak Mahindra Bank, some of the life insurance plays on the top line there, HDFC Life, SBI Life including. So you're seeing OMCs, the whole oil and gas space actually looking very good. Even the crude prices have been trending higher, not too much concern over there. Auto is doing very well. Hero Motor also jumping quite significantly. On the losing side, though, ICICI Bank is the one which has really lost out today, about 1.5% down. Some of your tech names have not done too well. The IT index looking weak, so Tech Mahindra, LTI Mindtree, Infi, Wipro among them that have not had a good day. But nothing too much to complain about. Enough of green on the screen, and the market width also looks decent. The question is whether we see that last bump up, Hersh, and specific stocks maybe will carry that story forward.
Absolutely, Tamanna. In fact, ICICI Bank has had a stellar run at least through last week. It was up 8% last week.
Okay.
Now, for the size that it is,
so you're saying
a percent and a half likely justified. I'm just trying to justify it.
No, I agree. But my question is, when banks all round today have woken up.
Yes.
Because last week, banks did not participate as much as the rest of the market. So if banks all round have woken up, why is ICICI Bank still slumbering and left out of the party is my only question there. And this is why I'm asking. HDFC Bank is 1.5% up. What happened to ICICI Bank?
Yes.
You never know. May pick up.
Yes. And that was on the back of strong volumes as well. 4% of that came on Friday, by the way, on the strongest volume seen since October of 2021. And we'll try to delve into that further through the show as well. Interesting stuff. But anyway, quickly on to some names which are buzzing on the back of individual news and action. Let's pull up something like an Amber Enterprises, up, 16% now. Pretty much all of Jeffrey's target price now nearly there. 5,200 was the target price. It's at 5,064 now. And there was a 19% upside at the start of the day today. So there you go. Pretty much all of it getting covered up. You're also seeing the top loser, at least among the newsmakers, being Fusion Micro. Now that one, write-off of 550 crore expected. It's hit lower circuit, of course. 550 crore write-off in Q2 expected after a 350 crore write-off in Q1. Mind you, on a 12,000 crore book, 900 crore write-off, nearly 7% of the book written off in 2 quarters. Doesn't look very encouraging. Of course, leadership change also on the anvil is what has been discussed in the board meeting before the Q2 numbers. And you also expect to see a fundraise, an equity fundraise at a capital adequacy ratio of 26%. Again, essentially all red flags likely, and therefore the stock down 10%. You're seeing SpiceJet. Let's pull that one up. Madhu Kela confirmed % or so in terms of investment by his JV. Also, Adani Total Gas securing around $375 million of financing. That one is up and away in trade. Glenmark Pharma, US FDA inspection at Aurangabad closed 5% higher, also Investec constructive, and that's why the stock is up and away. India Glycols on a tie-up with Amrut Distilleries, stock is up 4%. You also have Hind Rectifiers up 5% on the back of a 200 crore order win, and order wins continue. The galore continues. 3% up on BHEL on the back of order win. NBCC up nearly 2% on the back of an order win. Roughly 1200 odd crores for NBCC, 6000 crores for BHEL. Mankind Pharma approving a fundraising through NCDs, 10,000 crores. Stock is up 4%. Bikaji Foods, very interesting. Subsidiary incorporated for new venture into the QSR space. That one is up 3% as well. So a slew of stocks in focus. A lot of them very positive, as has been the day. Tamanna.
Day has been good. Are we going to inch towards the magic number by the end of the day, or is this just, frankly, if you don't hit 26,000 today, it's not a big deal. We're getting there. But it's just fun to sort of hit those landmarks in afternoon trade when you have this great boost set up. Just about 76 points away. Himen Kapadia joins us this afternoon of KR Choksi's Stocks and Securities. Himen, great to have you. What are you feeling like doing on the Nifty and the Bank Nifty right now?
I say a very good afternoon, Tamanna. Thank you for having me on the show. It's always a pleasure. I believe the Bank Nifty is where the action will most probably be concentrated on, because it was lagging, it was playing catch-up, Tamanna, and now finally it's done that and broken out. Now, because of that, even the PSU banks have started moving. So I guess, and HDFC and Kotak Bank still haven't moved. 4 years of a blazing bull market, and these two blue chips haven't moved. So I think it's only the banks for some more time to come. Tamanna.
Okay, that's the story on the index, which is inching now towards the 26,000 mark. Let me just get your picks very quickly, Himen.
Yeah. Firstly, a buy on Maruti. Maruti has been moving sideways, has given some positive price action on the daily chart for the 55-day exponential moving average. Oscillators giving a buy. So I can buy Maruti at 12,690. Stop loss 12,540. Target of 12,990. The other one is HDFC Bank, but it's not a trading buy. It's more of an investment buy. It's a 12 to 15 month call, Tamanna. HDFC Bank, buy at 1750. Target 1600, target 2050. I believe the target will very comfortably get overshot and it will move towards 2200. So it's probably a 12 to 15 month buy. Can happen sooner, Tamanna.
Okay, so HDFC Bank one to watch out for. Vodafone is another stock which has been in focus. In fact, their con call is on right now. Let's listen in to what the management is saying.
Including preferential equity raise of rupees 24.6 billion from Nokia and Ericsson. In June 2024 Spectrum auction, we acquired 50 megahertz of spectrum across low band and mid band in spectrum in 11 circles. The additional 900 megahertz spectrum acquired in 7 circles allowed us to dedicate adequate 900 megahertz band spectrum for 4G, thereby enhancing the experience of our 4G customers in these markets. In July, the new tariff plans became effective across the industry, which marks a vital step towards improving the returns in the industry. Further, considering the large investment requirements, industry will need further price increases. Finally, with the recent closure of our equipment agreements, we are firmly on our journey of VIL 2.0, and from here on, we firmly believe that we will stage a smart turnaround to effectively participate in the industry growth opportunities. I would like to inform you that on this call, we will only address questions relevant to these recent developments. With this, I will hand over the call back to Ryan and open the floor for questions and answers.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Sanjesh Jain from ICICI Securities. Please go ahead.
Yeah, good afternoon, sir. Thanks for taking my question. The first one is on the AGR Supreme Court ruling. Is there any further possibility for us to pursue this, or this ends any effort on the relief side for the AGR liabilities?
Hi, Sanjesh. This is Ravinder Tucker. Let me take that question. So I think to answer your question, from the court perspective, we believe that this is the final outcome from the courts in regards to the curative petition, because we believe that was the final request that we could make. But what is possible, which I think is quite important, is to pursue further remedies and possibilities with the government. I can tell you that we have been engaging with various senior government officials. Actually, we were engaged with them prior to the court ruling, and certainly we have even after the court ruling. I think all the engagements have been with a very clear view from every side that the merits of our case on the AGR in regards to the calculation errors and mistakes, and then of course interest and penalties on those mistakes, the merits are quite strong and correct. And while there was a hope that the courts will obviously consider the petition, the fact that the court has not done so means that the now action and responsibility in some ways falls squarely along with the government.
Okay, interesting line there. The last line from Akshay Mundra was very interesting. The question asked him in that con call was that now what happens after the AGR dues? The recalculation petition on the AGR dues has been declined by the Supreme Court, and do you have any other hope now? So Akshay Mundra says the responsibility now falls squarely on the government. They're also saying that they're engaging with senior officials. Essentially, now Vodafone has thrown the ball back in the government's court, saying, please rescue us. Whether the government decides to or not is the other question. Hemin, just on the charts, what are you feeling about Vodafone? I think we spoke about it last week when it was having a down day. Today it's having an up day. Does your view change?
Well, not much. Keep a stop loss of 9 and hope for the best. I think the volumes have been significant, and some levels I believe have held. So at the risk of sticking my neck out, I'd say the downside is almost limited. If Friday's low doesn't break this week, I think that would be a technical positive, Tamanna, and then one can expect some sort of a bounce back, decent bounce back.
So the thing with the Vodafone stock, Hemin, and the target prices they are just so wide ranging, from 15 rupees to 21 rupees. I mean, it's essentially an anything goes kind of a situation with a lot of retail investor participation. For someone sitting on the sidelines right now, what is the advice? For someone in the stock entered at a higher level, what is the advice?
Okay, if you're sitting on the sidelines, sit on the sidelines, don't do anything. Logic said the government will not let it sink. It's very clear they don't want just two guys running the industry. But that is a thought process. There's a difference between a cup and the lip. If you have positions, keep a stop loss of 9. I don't think it's, I think that famous small target given by some other brokerage is on the anvil. I don't think so.
Okay. All right. Let's talk about the stock of the day. Amber Enterprises, the stock has soared nearly 17%, and it's all on the back of that Jefferies note. Puneet is joining us, now 15%, so off its highs. Puneet is joining us with details on what Jefferies is excited about. But Puneet, beyond what Jefferies is saying, what is really working for Amber right now?
Well, thanks for that. So let's start with the Jefferies note. They had a target of roughly 5,200, which was a 19% upside from the previous close, but that all was hit in the intraday session today itself. They have mentioned about, the company as well as the penetration of the AC market. So let's start with what they are bullish on. They say quarter one for the domestic AC industry was very strong, and that was benefiting Amber Enterprises as well, who supplies to makers such as Havels and other players who are in the domestic AC market. Apart from that, imposition of anti-dumping duty specifically on PCBs or printed circuit boards which are used in these products was also another key positive for the company, which helped it get orders from the local players within India itself. They have also said that they have a strong order book, roughly about 2,000 odd crores in mobility division, and that augurs well for revenue growth as well as guidance for the next few years with strong visibility. and they mentioned that the company's expectation of growth for this year is roughly around 45% compared to last year on a very high base as well. They are expecting normalized capex in FY25 roughly about 370 to 400 odd crores, and that will augur well for its return on capital employed or ROCE metric to come in at roughly about 20% by FY26. Stock, according to them, is trading at roughly around 37 times price to earnings 2 years forward. But I also, as you rightly said, want to look at some other metrics that work for the company and some others that aren't. On industry data, it's very interesting what Jeffrey says. Currently, around 1 crore ACs were sold in the last year in FY24. That's expected to triple to roughly about 3 crores by FY30, and that will, of course, benefit someone like an Amber Enterprises. They are also expecting roughly about 17% growth CAGR on the industry, and that will benefit Amber as mentioned. Now, in Q1 specifically, the consumer division, which includes the ACs, grew roughly around 44%. But what's also heartening is the 45% growth in electronics, basically the printed circuit boards, which goes into these products. So that's another heartening factor, that there is a second division that's been created now. Apart from that, railway subsystems, while smaller, currently around 100 crores of revenue. And when you look at the margins as well, the consumer division, generally for all EMS players, the revenue grew, but the margins don't. But for Amber, the slide was very contained at just 20 basis points for this quarter, and they've expected that the next 3 quarters will be better for margins of consumer division. Also see the electronic division margins growth roughly around 360 basis points. That's also another strong thing. And railways, which is a new division, roughly around 1/3 of the electronic division, but the margins are upwards of 20%, and they're increasing their products also in that. So that's what I'm very positive on. What to look forward to is another key thing which we should talk about. Backward integration within AC, which is making components. The second thing is a new joint venture they formed for the railway division. They will be, entering the Vande Bharat space specifically over the next 6 to 12 months. That's another key factor to look at through this joint venture.
Okay.
And finally, on valuations, currently at 100 times price to earnings for FY24, and going forward the next 2 years, revenues are expected to double, and they've already doubled from FY21 levels. So that's another thing. The base now is roughly quite high compared to what FY21 levels were, but still, the expectations is very high from Amber at a very high valuation right now.
Okay, so valuations are high, but so are expectations. Jeffrey is excited about it. Stock is up today. Himen Kapadia with us. Himen, what are you doing with Amber right now if you hold it?
Well, that's a dicey one, Tamanna, but we are in an uptrend, a very constructive uptrend on all time frame. But yeah, if a stock moves like this in one single day, I'd say stay away a bit, wait for sanity to prevail. I believe 4,600, 4,700 is a congestion area. I think I would be more comfortable doing something over there. Currently, it's not, obviously it's not FNO. There's no short, there's no long at this level. Tamanna.
All right, Amber Enterprises also in action. Focus also on the JP Morgan Summit, where NDTV Profit is speaking with a whole host of people. Let's listen into the conversation with Latika Chopra right now.
Consume and premium products, uptrade is fairly resilient. This is a pretty structural tailwind, if I may say so, for the sector. And we also see companies reacting to this, right? So companies are also, we have this monthly tracker, we track what are the new launches in FMCG sector. And we continuously see that the pace of innovation has stepped up. But more importantly, we are seeing more and more launches in this premium end of the consumer landscape. The other trend that we, are witnessing is formalization of a lot of consumer categories, which actually applies both on staples and discretionary side. Whether you see it in the QSR space, whether you see it in basic staples, consumers are preferring, packaged foods over loose staples. People are preferring brands versus non-brands. So, this is a very material shift that's happening. And then, of course, we have some of the, other factors like growing out-of-home consumption, on-the-go consumption. We are seeing, consumers choosing for more healthier products per se. So these are some of the other nuances. How are companies looking at it? I think one is the innovation aspect that I talked about, right? Having the right formats. The second is distribution, aligning their investments to be more agile about the new age channels, and it's just not about being present on a e-commerce or a quick commerce channel, but kind of tailoring their products and SKUs also which probably make more unit economic sense on these channels. So we continue to see that. And another aspect, what companies are obviously trying to do is capability build up, in terms of talent, getting more digital and technology skill set, more supply chain agility. Some of these are the other nuances or other aspects that we keep coming across.
Are you seeing a trend where the quick commerce is taking away share from the e-commerce?
See, I think quick commerce is, of course, right now, pretty much, over the last 2-3 years has emerged and has been disrupting the broader retail industry. It's definitely, taking share from everybody, whether it's modern trade, whether it's regular e-commerce, whether it is traditional trade, right? So I think they are focused right now on densely populated catchment areas. So yes, they are taking share away, but we have to keep thinking of the broader grocery retail market. That's wide. And, at an all India level, maybe that's less than 10% of the overall market. Some of the larger cities, it could already be like 25-30% salience. So I think there is space for every channel to grow. And our view is that, value retail, organized value retail and quick commerce, will all coexist. But yes, you will have some parts of these tier 1 metro cities which are seeing rapid adoption of quick commerce. And then, of course, the plethora of categories also in these channels is increasing.
I'm saying that because we're seeing high value transactions also happening in quick commerce, which was earlier limited to e-commerce. So do you see that as a big challenge to the e-commerce players in that sense?
See, within the sector coverage that I have, we've started to see more beauty and personal care portfolios being, provided on these channels. Earlier, just basic top-up purchases, we are, this segment is also starting to see more discretionary purchases being also made. So to that extent, you're right. Now, this is also still early years of, evolution for this channel, but I guess companies incrementally are more and more open to experiment, different kind of products on these channels. And then, of course, somewhere one would, both the quick commerce companies and the FMCG companies at some point will determine, what makes, sense from a profitability perspective as well.
Right. So now I want to understand that with the kind of inflationary pressure that these FMCG companies are already having on their margins, I understand that these FMCG companies are taking price hikes every now and then. But do you think that these price hikes are sustainable? Because, the pressure on margins will continue going forward.
Yeah. So, see, first to look at the FMCG part of the business, actually this space saw significant price increases, after pandemic due to variety of macro factors. And then we went through a period of deflation, actually. Rather, as we speak, I think companies have just started to initiate some price increases. So after 1.5 years of deflation, we're actually coming back to a bit of inflation. And we're probably moving back to more nominal inflation. Okay, so I'm not extraordinarily worried about inflationary trends at present, because if you see, crude behavior has been a little more benign, agri inflation is a bit more higher. But in a way, broadly, as we stand today, we for now see a need to take, low to mid-single digit price hikes. Of course, there will be different segment-wise, category-wise nuances, but we do not anticipate a very hyperinflationary period. And to that extent, I think companies will be able to mitigate these incremental cost pressures. And of course, over the last 2 years, companies have also invested a lot behind advertising and marketing. And hence, we do anticipate, their margin structure should remain stable or probably witness modest expansion in certain companies. I think the good part of, strategic approach that we are seeing from companies is that they're actually focused a lot more on driving innovation, driving top line. They are becoming, adapting or aligning their business models to these changing preferences that we talked about, and are not so focused on driving margin expansion. I think they're more focused on driving the top line growth, and I think that will be a bigger driver of earnings growth, for the sector going forward.
All right, so that was a whole host of voices actually coming in from JP Morgan, and you'll be hearing this tomorrow as well, and all evening on NDTV Profit. But now on to an exclusive. Sources tell your channel that the government will likely form a selection panel for the new internship scheme. Remember the scheme that was announced in the last budget, which calls upon top 500 companies of the country to induct interns to add to skill sets. My colleague Shrimi Chaudhary joins with exclusive details.
What we are picking up from the government sources is that this selection panel, which is like led by Ministry of Corporate Affairs, the nodal ministry for Priyam internship program, is going to have a selection criteria, and accordingly they will send or forward the selected candidate to the respective companies who are going to absorb these 10 million youth which are not from the elite institution like IITs and IIMs. What we are also hearing from the sources is that the number of application which this panel will forward it to these companies are not going to necessarily absorb all those positions. They will wait for further lots to come. So there is no mandatory criteria for these companies to sort of take all the application on board. MCA, which is working on this whole guidelines on this internship program, where we have got indication from the government sources is that there will be a clear eligibility criteria and non-eligibility criteria for the interns and the candidates, that who all is going to avail this particular scheme. The sources also telling us that they might put out top 500 companies' name, on the basis of average CSR spent over the last 3 fiscal year. So the official data until FY23 showed that Reliance, TCS, IDFC, HDFCs are among the top CSR spender, and that could absorb these candidates. Remember, the budget has announced this internship program where they said that we will spend like 54,000 crore on this whole scheme, where companies doesn't need to pay anything. It's the government sponsored program. However, it's a voluntarily program and not mandatory for the companies to absorb those candidates.
Okay, all right, that was an NDTV Profit exclusive. We'll take a very short break, but we're coming back with the top BTST ideas for what is looking like an interesting afternoon. Stay tuned.
Welcome back. You're tuned in to India Market Close here on NDTV Profit. Also joining us, Hemang Jani, independent market expert, talking to us about, of course, fundamentals. Hemang, a few of the top performers today, life insurance stocks now, these ones have really been on a rally, 20%. They've given market-beating returns over the last 3 months. It was an unloved segment of the market, good growth coming back. Margins, of course, on the softer side, but the impact of all the regulatory changes seem to be far lower than what the market was penciling in. But how much of that, in your view, has already now been penciled in, and you still believe that there is some value left in private insurers, especially life insurers? Hemang, that's for you. Hemang, not sure if he can hear us. Okay, so...
All right. Yeah, we'll try and get Hemang back on, but yeah, let me take that to Hemen. Meanwhile, Hemen, if you can hear me, just the whole life insurance play, and there's a Bernstein note out. Hersh will join us, will tell us the details about it in just a second from now. But look at it, HDFC Life today and SBI Life, all of them on the back of that note and a positive outlook. But on the charts, are you liking any of these counters?
Actually, Tamanna, SBI was the first of the blocks, and I think it led the entire gamut, whether it's ICICI Pru or ICICI Lombard, and then XYZ everything. Actually, HDFC Life is technically the cheapest. Why I'm telling you technically the cheapest, Tamanna, all of these stocks posted fresh all-time highs compared vis-a-vis to their 6 months, 2 months, 2 years, 3 years, whatever. HDFC Life still hasn't crossed its all-time high, which was posted some 3 years ago, Tamanna. So, okay, only hitch, if any, it's moved from 510 to 716 4-month flat. This current bounce might be a correction, part of a bigger retracement. So I would say, I'm not sure if it's worth buying completely at this level. One can spread your purchase, buy some now, buy some later. But yeah, HDFC Life stands out from the entire pack of life insurance stocks, Tamanna.
All right. Thanks for that, Hemen. Just contextually, you have Bernstein note on life insurers suggesting that reasons for comeback of private life insurers is growth, the regulatory impact being lower than anticipated, and good valuation comfort. That's what they attribute to as reasons for the outperformance. Also, news of a possible cut in indirect tax rates. So a GST rate may actually fall from 18% to maybe 12% or even lower. And what Bernstein suggests is they prefer companies which have the scope for further market share gains as well as margin expansion, and which will likely generate better value for shareholders. Some of those stocks on an absolute tear. Hemang, if I can come to you, life insurers, they've been in the thick of things over the last 3 months or so, 20% in terms of returns versus the Nifty 50 is 10%. Outperformance clear. Hemen likes maybe an HDFC Life, which is still to clock its 3-year high. Your sense with regard to both valuations as well as the possibility of growth, which has really come back sharply, and at least that's what market seems to be penciling in.
So good afternoon. Thanks for having me. So clearly, this space has seen a good amount of action in the past 3 months or so, primarily because earlier when typically the pure banks do not do well, the other themes around that space typically does well. So within that, insurance fitted extremely well. Also, we had good positive traction in terms of the annual premium growth and other parameters. The only setback was this, there was a postponement of this GST Council meet, which the market was expecting that some positive news will happen. And the fact that you had also some reforms in terms of surrender value changes. So I think the sector has gone through a bit of a correction also. But from a investment perspective, we do think that this presents a great opportunity for a low penetration, stable 15-18% kind of a growth. We do like SBI Life and also HDFC Life at this point of time.
All right. Those are at least Hemang's preferences. Let me quickly go across. We also have SpiceJet in focus. NCLT New Delhi issued a notice for unpaid operational debt. Charu brings us the details on this one. Charu, take it away.
Hi, so the National Company Law Tribunal, which is the company's law tribunal, was hearing a case filed by a software service provider known as Tech Jockey Infotech Private Limited, which went to the tribunal and said that SpiceJet got some software services from the company. However, the dues remain unpaid. This amounts to unpaid dues of around rupees 1.17 crore. After hearing the case, the NCLT noted that while SpiceJet has acknowledged the non-payment of dues, it has not come forward to pay those or really, set the record straight about paying or when they are going to pay this amount. That is why a notice was issued to SpiceJet in the insolvency case that was filed by the software service provider company. And now in November, another hearing will be held. By that time, SpiceJet is expected to give replies to the allegations made against it by the software service provider.
Okay. Charu there on SpiceJet. So good news, bad news, alternates for SpiceJet. SpiceJet and Vodafone, two very interesting companies, fundamentally hanging on by a thread in terms of solvency in the market, very far from being the top player, fighting for survival and for market share, but being rewarded constantly by the stock market. So I find that an interesting comparison between the two. Himen, your assessment of SpiceJet on the charts?
Frankly speaking, Tamanna, it looks good. And we formed a prolonged rounding bottom, which is basically a bullish formation. I would be more positive than negative. I am not fighting the fundamentals in any manner. But on pure technicals, the stock looks good. And I would be surprised if we don't go up further from here. So I believe it is heading towards 88 and maybe even more, Tamanna.
Hemang, just want your take first on SpiceJet and then we'll talk about Vodafone in a bit. But let's start with SpiceJet. There's a mix of good news, bad news every day. The QIP has concluded successfully. How far will that 3,000 odd crore go is the question. Some names, some marquee names, as we first reported, have made it to the list of potential buyers or buyers of that QIP. Does that give you confidence for SpiceJet?
I think, Tamanna, first of all, see, this is a high beta space, and more so given the fact that, it's a very small cap, or I would say a micro cap company, just about 6,000 crore kind of a market cap, and a very high debt of about 6,500 crore. So we have to bear in mind that this kind of companies will display a very high volatility. Now, having seen the worst possible, scenario where the company was struggling in terms of debt, was not able to raise funds. Now, if at this point of time, if it's able to raise 3,000 crore and continue its operations, and you also had a bit of a relief come through from one of the vendors also when that part of the debt was converted into equity. So I think for somebody who is having a little bit of an appetite, I do think that this presents a good opportunity, because now if you look at this entire airline space, you have Indigo, which is by far the biggest player and a very huge market cap, high valuations, but there is nothing in between. So I think SpiceJet clearly fits the bill over there with that caveat. It's a bit high beta, play. I do think that the downside from here is not much. Whatever is the conversion price for this QIP around 60, 61, that can be taken as a base price, and it can, give you a good 30-40% kind of an upside.
And what about Vodafone? Hemang, I mean, we've just had this very detailed conference call. It's just ended actually, and we'll get my colleague Rucha, who tracks the sector, to give us a recap of the key highlights of the con call. But at least from what I've seen, the big takeaways include the management saying that now, the end of the road in any hope for AGR reprieve, at least from the Supreme Court. The ball is in the government's court. So it depends on what they'll do. They want to focus more on a 4G rollout rather than 5G, saying they don't see too many use cases for it. They will introduce 5G in 17 circles, though they're on their target track for CAPEX. But is it going to be enough is the question, Himang. How are you feeling about a Vodafone right now?
I think, Tamanna, there was a undue hype that was created because of the follow-on offer and the fact that promoter also infused money. The way the stock moved up from 11, 12 bucks to almost 16, 17 was more of a hype. Many people knew that the debt part is very significant and the company will not be able to display any meaningful earnings growth given the current financials. Now, this spectrum-related setback, in my opinion, the per share, impact can be about 4.5 rupees. The stock has already corrected. So I think the stock should remain broadly in this range of about, let's say, 10, 12 zone for an extended period of time. But I don't see it really breaking down significantly. So, there are a lot of these retail investors who are looking for a 10, 15, 20% kind of a move, and they prefer a low price stock. So probably from that perspective, it fits the bill, but I would avoid buying purely from a fundamental perspective, given the fact that you are getting Bharti at a slightly cheaper valuation compared to Idea. So it makes no sense to buy Idea even at this price.
Stock still about 19% down in the week and come off its highs a bit, but this is an investor favorite, a retail investor favorite for sure. And that's why you always see a lot of buzz and a lot of volumes in a Vodafone. Varsha is joining us now on Glenmark Pharma. There's a note out, Varsha, which is quite bullish on Glenmark Pharma, I believe. What is Investec saying?
Well, Tamanna, Glenmark is buzzing basically on the back of two reasons. One is Investec's note, of course, and the other one is their manufacturing facility in Aurangabad has got zero observation. Let's see what Investec is saying. So they've given them fast, long recommendation and set a target price of rupees 1900, which implies a upside potential of 18%. Now, why are they positive? So they've highlighted two main reasons. One is their strong earnings and strong cash flow are the main two reasons why we are seeing up move in the stock. And their zero observation from the Aurangabad facility is actually a positive news, especially from the respiratory products like Flovent MDI and nasal spray. That's so these products are actually manufactured in their Aurangabad formulation facility, which is the main revenue driver for the company. And talking about the other markets, so 70% of EBITDA, according to Investec, has come from branded generics in India as well as the other markets. That's a big part of their success. And according to Investec, Glenmark's stock is expected to trade at 23 times their estimated earnings by September 26, which makes it an attractive as when it comes to valuation. And according to Investec, stock is inexpensive versus peers who have higher exposure to India and ROW branded generics, and they forecast 20% EPS CAGR over FY 25-27, and this appear higher on depressed earnings as of FY 24.
Okay, thank you so much for that, Varsha. Sticking with Pharma, we also spoke with the managements of Mankind Pharma as well as Wockhardt on their latest developments. Listening to a slice of both of those.
If you look at Mankind's growth has always been in the range of 1.3 to 1.4 times to IPM growth. Say approximately, in the first quarter, our growth is 12.some%. On the second side, growth-wise, BSV has better growth than ours, 15 to 20%. That's a kind of a range. Their EBITDA is more than us. Our EBITDA in the range of 25 to 26%. Their EBITDA is in the range of 28 to 30%, and going forward, this would always increase actually. So in all, what we are basically acquiring is a fantastic entity in the form of having what Mankind never had, very high entry barrier products, which should not be seen from the lenses of pharma side. This is a different kind of entity where products are amazing. To make these kind of products, you need a time of 5 to 10 years. At any given time, a number of their products are in almost a monopoly kind of a stage. And if any other competitor would be coming, the price does not go down, profit remains good. That's a plus side of this business.
generally we will discount for Indian market by at least 75 to 80% of our US prices. So because one of our objective is not to have the product success in US and worldwide, but also make it affordable so that a large number of patients can use it and therefore they can save lives. So we have a dual purpose here, that we make these drugs available worldwide, and as per the ability to pay, the pricing will be adjusted accordingly.
Okay, so a clutch of those pharma stocks in focus. In fact, the Nifty Pharma Index, Hemang, if I can come to you on this one, up 37% year to date. It's given such a stellar return over the year to date period. It's made a real comeback. How do you view this sector at this point? Valuation comfort, one. Second is, of course, what are the possible risks, if at all, that you feel in this space?
Clearly, Hersh, when you look at the sector, it has performed extremely well in terms of quarterly numbers. 27% kind of earnings growth, one of the largest across sectors. Also, when you look at the numbers and hear the management commentary in the con call, across the companies, they are sounding quite positive about the growth in the generic business, India market, specialized products. Be it Lupin, be it Sun Pharma, Dr. Reddy had its own sort of issues, but by and large, the sector did well. What was heartening to note is that on the API side, because of the Biosecure Act being passed, people have turned more positive on the stocks like Biocon, Laurus Labs, TVs. So overall, I think that the sector presents a great opportunity. Valuation-wise, it is not stretched. And you are seeing fundamentally, positive developments in terms of, US elections. If you have, some favorable outcome, that may open up very big opportunities for some of the contract manufacturing players. So overall, overweight on the sector. Preferred picks within the large caps, we like Sun Pharma. Even I think Cipla presents a good, stable kind of a, play. And within the mid caps, we like Aurobindo Pharma and Laurus Labs.
Those are preferences as well. Himen, one piece that has kind of puzzled me a little bit with the way markets have been today, the PSU banking index, which has been largely flat or maybe even negative through last week, despite it being a very strong week for benchmarks, has essentially given a 3.5% return today alone. Very strong rally. And on the flip side, if we can pull up the Nifty Private Bank, it's been the exact reverse. Talk us through what's your sense, and from a technical standpoint, where do you see some of these trends play out? How do you see it play out this week?
Well, Hersh, if you look at the charts, the Nifty PSU Bank Index has been corrected for some time. And it's not restricted to only the PSU Bank Index, Hersh. Whether it's defense, it's railway, it's power, most of the PSU stocks have had a humongous move. Amazing. So they are all under the weather, so to speak, but it's a correction within a bull market. Now, coming back to PSU index, it was consolidating around 12 trading sessions. It's broken out today above 6,800. At least the short-term picture, the volume price action seems to suggest that yes, a bounce is underway. Now, whether this converts into something from a medium-term point of view, one would have to wait and see. But if you were to say, now PNB is on your screen, if you say PNB from a year point of view, I'll tell you 40% from your Hersh, or maybe even a 50%. But currently, it looks more like a recovery and not a rally. And if you see ICICI Bank has been leading, maybe even Axis. But now finally it's time for the real heroes to come out. It's HDFC and Kotak. They are just beginning a move. 4 years of consolidation. I think they are a long way to go.
The way, Himen, you say the time for the real heroes to come out. So what is ICICI Bank then in this lexicon of yours?
No, what I would say is they are running a relay. That was the opening lap, and Axis Bank was the second leg. Now put up third leg and HDFC the final, Usain Bolt sort of the last and fourth finishing leg. So I believe it's simple, Tamanna. 4 years, bluest of blue chips. For 4 years, if they're virtually hatching eggs, doing nothing, when the breakout comes in the next year, if not 2, is going to be good for both these stocks. And not to forget the Bajaj twins also, Tamanna.
Okay, so they've definitely, the Bajaj twins have not been hatching eggs. That I think you would agree. But my question is, what has changed fundamentally to see the finish line of this relay race? Just to take Hemant's very interesting analogy forward, Hemang. ICICI Bank, HDFC Bank. Are you as excited about HDFC Bank as Hemant Kapadia is today?
See, time and again, it has given a lot of hopes and people kind of latch onto that either because of MSCI inclusion, because of, the fact that the numbers have been quite okay. But the stock has actually not performed. So I do think that from let's say, a short-term tactical point of view, banking does provide a good opportunity given the stark underperformance that we have seen in the last, let's say, about 2 years now. Whether it's going to be a sustainable kind of a rally, I have my own doubts. More so, given the fact that when you have a rate cut in US and in the domestic market, the banks are struggling to kind of raise deposits. I doubt how possible or sensible would it be for people to kind of grow their advances in a meaningful way. But from a rotational perspective, when some of the pockets go through some sort of a profit booking, I think banking does present a great opportunity. So very positive on names like ICICI, State Bank of India, even HDFC Bank for that matter. But I would not go too aggressive over there. I would just review the performances next quarter and then take a broader call.
Okay. All right. Another very newsy stock this afternoon has been Vodafone Idea. The management has just ended a con call a few minutes ago. Rucha was listening in. Rucha, what are the big takeaways from the con call?
Right. So 2 most important takeaways that I found out is the conversion of equity into debt of rupees 170 billion. And number 2 is tariff hike of similar level after 15 months cycle is what the management is assuming in. So these 2 points are most relevant assumptions of the management. Now moving on to the AGR dues case, which has been the talk of the town. Well, the company believes that now the talk is in the hands of the government and not the Supreme Court, and hence the company has initiated a fresh dialogue with the government, and they're also in the process of putting a new request to the government for considering the AGR dues case. Now, talking about the tariff hikes, as I mentioned, they said that the industry will need further tariff hikes, and they are factoring in a similar level of hike after 15 months. Now, talking about the cash flows, well, the cash flows generated by the business will be used towards the payment of government dues. The company has bank loans of about 48 billion, and the vendor overdues are, getting cleared. So not much of a bit from vendor overdues. But on the debt, they also mention that starting FY27, the total payout will be $430 billion annually. And out of that, 170 billion rupees will be, 430 billion rupees annually. And out of that, 170 billion rupees is the deferred series of installment, which the management is expecting to be converted into equity. And the balance will be the installment with which the company will pay out of the cash flow. Lastly, talking about 5G, well, it said that monetization of 5G is still not happening, but will be launching 5G in all the 17 priority circles.
No, just on the first point you made, Rucha, when you said that the company is assuming equity converted to debt at $170 billion, are they hoping that this will happen, or are they assuming it based on some assurance? Because if you're saying they're assuming it, it indicates that they are going to be accounting for this on their balance sheet.
Right. So just correcting you, Tamanna, it's 170 billion rupees. But yes, they are assuming that this will be the pillar they are standing on.
No. So the company has said we are assuming that this debt will be converted to equity by the government.
Yes.
All right. That is optimistic. That is optimistic to say the very least.
Yes, and it'll really balloon the balance sheet as well. Now, mind you, this is an 80,000 crore market cap kind of company. 17,000 crore will be a huge dilution if that were to happen.
Wow.
Just in terms of the size of it.
And yeah, I mean, I am a little surprised with that kind of confidence, if that indeed is what they have said, because for the government to really convert the debt to equity is equivalent in a sense to a bailout. They'll do that with taxpayer money.
And for how long?
And for how long? So it's quite an assumption. Word of the day. All right. What's our BTST idea, Hemen? Let me come to you.
Okay. BTST would be on UPL, Tamanna. It's at around 590 to 593 right now. 5 rupees stop loss, 10 rupee target, BTST on UPL.
Okay. Clutch of housing financiers in focus, of course. Bajaj Housing Finance being listed last week. And we have a JM Financial note which has come out initiating coverage on Aadhar housing. That stock is on a tear now, 7.5% higher in trade as we speak. They speak about a whole bunch of things. One is geographical presence with regard to just the diversified geography which Aadhar has, over 20 states of presence in essence. Margins likely to remain steady, a strong tech foundation and valuation comfort in a 4% ROA plus kind of company. Hemang, let me come to you on this. First off, specifically on Bajaj Housing, if your views, as quickly as you can. And then, of course, any other names which ring a bell for you and which you prefer, if not Bajaj Housing.
So Bajaj Housing, I think a retail favorite stock right now. The volatility has reduced, but I do think that, people would want to add if there is let's say another 5-7% kind of a correction on the way, and it will give you that, 10-15% kind of a move. So only from a trading point of view, it may make sense. Fundamentally, I would avoid, these kind of companies which are, quoting at a 6.5 kind of a price to book. And, I think this is definitely a stretch. So I would surely go with some of the other housing finance companies, in the listed space. You have a whole host of companies to look at. Maybe LIC Housing, Aadhar, as you touched upon, is doing exceptionally well. And maybe there are few more companies which are there. So I would be more comfortable buying into those names rather than chasing player like Bajaj Housing Finance, which kind of has done so well, but from current price point doesn't make too much of sense.
Okay, thank you, Hemen and Hemang, for joining us today on an exciting afternoon. Not quite there yet. We are lacking the Usain Bolt. If I were to talk about how, Hemen Kapadia has described private banks today, he said the Usain Bolt will be an HDFC bank. Well, Usain Bolt is taking a break because the private bank index is up in the green, but not quite. Nifty bank just about 0.5% up. No one's complaining, above the 54,000 mark. Nifty at 25,932. Impressive to make it above 25,900 and to close there for the Nifty, no doubt about that, about 0.5% up. Let's pull up the heat map very quickly before Hersh takes you through what's happening on the broader side of the market. Is your portfolio looking as good as the index? Is the question you're probably asking yourself. If you have auto stocks, then it definitely is. Bajaj Auto, M&M, Hero Motor, all completely revving in trade, not quite for Aisha. Similar sort of mood on the bank side. Most doing well except for ICICI Bank. So outliers there on both ends. A Bernstein note has seen that upswing in SBI Life and HDFC Life. Nothing very new that they've said in it, but maybe reiterated why they're bullish on this space. So you have on the downside IT, but on the upside banks, led by auto actually. But auto is really the hero of the story. On the broader end of the spectrum, also not half bad, Hersh, but that last push has been missing, I would suppose.
Well, yes, absolutely, Tamanna. So that's there are some pockets of the market which, of course, haven't done well. It's not a secular green, clearly. And we can pull up the contributories too to get an indication as to what possibly could lead to the move to 26K. ICICI Bank for sure being the biggest laggard today. If you just remove that, likely 20-30 points added straight to the index right there. You're halfway there from here to 26K. So maybe that's one space, or that's one possible stock which needed to maybe perform better.
Your tech giants, right?
Yes, and then you have, of course, your Nifty IT, which ought to have participated. So those are probably two places where participation could have come from. We've closed though, and we have the whole week ahead of us to get to 26K.
We're not being greedy, but we just thought we'll kick off the week in style. We have the rest of the week to celebrate. I reckon you'll see. Let's see what happens in the first half of tomorrow, but broader markets as well.
Yes, let's pull up the Nifty mid cap. There you go. So those are some names, of course. Amber Enterprises up and away in trade.
Off its highs of the day.
Off its highs, it was up 16.5%, maybe 17% at the top, but 19% upside given by Jefferies, and on the back of that, that stock is up and away. You're seeing some other big movers as well, something like a VIP, V-Mart doing well in trade. What's not doing well, some cigarette stocks, VST as well as Godfrey Phillips not doing very well. Wrights on the back of a bonus also not doing too well despite that. Sterling and Wilson down 5, locked in lower circuit. IIFL 2 down nearly 4%. So some movers on the back of course, lots happening.
Yeah, so brokerage notes in focus for tomorrow as well. The overview in the market definitely being positive, but let's see how it moves forward in the lack of very clear triggers. How long does that Fed cut upswing continue, and does it continue into the rest of the week? But that's all the time we have for now. From Hersh, me and the entire team that put the show together, thank you so much for joining us.